It is Bloomberg Businessweek Daily on this Federal Reserve Friday. I think it's fair to say I'm Tim Stenovec, along with Norah Mulinda from the Bloomberg News Equities team. It is Friday, August 22nd, 2025, and our focus squarely on not just the equity market, but certainly on what we heard from Fed Chair Jay Powell a little earlier today, because Wall Street getting the rally signal they were hoping for from the chair of the Federal Reserve. Taking a look at markets right now, and we're going to have more from Charlie Pellet in just a second. The S&P 500 up 1.6%, the NASDAQ composite up 2%, the Dow up 2%, but type in RTY on the Bloomberg terminal. That's the Russell 2000, and that is surging. Earlier in the session is up as much as 4%, really hovering at around 3.9% to the upside since we heard from Fed Chair Jay Powell. Norah Mulinda, we're going to have Molly Smith join us in just a second. She's Bloomberg News economics editor. Give us a breakdown of everything we heard in that speech, because it wasn't just the equity market and traders being happy about the idea of a potential September rate cut. They covered a lot of ground. Absolutely.
There was so much ground that was covered. I mean, we saw a lot of activity also in the bond market. That's something, of course, to note. But I think people are really just waiting to hear from Jerome Powell. There's a lot to focus on, especially as we look ahead to next month. But later on, super interesting, we're going to be hearing from CFO of Webtoon. It surged more than 80% after it announced a deal with Disney. They'll be joining us later.
Also, the CFO of Axiom Space is back with us just ahead of an orbital data center launch. Yeah, we're talking about data centers in space now, guys. You got to stay tuned for that one. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. And right now we do have stocks rocketing higher with the Dow, the S&P, NASDAQ solidly in the green. But a couple of developing stories. You heard it live on Bloomberg. President Trump says Intel has agreed to give the U.S. government a 10% equity stake in the company. Trump cast the agreement as one that would revitalize Intel, saying the company has been, quote, left behind compared to competitors in the chip-making industry. Intel shares right now, they're up by 5%. The Dow, the S&P, NASDAQ, they're all advancing. Jay Powell spoke. Markets moved higher. S&P up 103 right now at 64.73. That is a gain of 1.6%. We've got the Dow up 892, a higher by 2%, and NASDAQ up 427, up by 2%. Stocks surging on rate cut expectations in September. We'll have more throughout the day right here on Bloomberg. Our Mag 7 index up 2.6%. Tim mentioned the Russell 2000 index of small cap shares. That is surging now by 3.8%. Dow Transport's taking part in the rally big time, up 3.2%. The 10-year yield 4.25%. The 2-year 3.68%. Spot gold up $36 the ounce, up 1.1%, 33.74. West Texas Intermediate crude up 0.2%, 63.74 a barrel. And Bitcoin is surging 4.2% right now at 117,095. Bitcoin again up by 4.2%. Briefly, Apple in early discussions about using Google Gemini to power a revamped version of the Siri voice assistant. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Covering a lot of ground there. Shares of Apple, as Charlie mentioned, up 1.5%. Worth repeating the redhead that crossed the Bloomberg terminal, and exclusive by Bloomberg's Mark Gurman. Apple's exploring using Google's Gemini AI to power a revamped Siri. We're going to have more on that a little later in the program. I'm also watching what's going on with Intel right now, up close to 5% as we speak. We just heard the president saying that Intel has agreed to giving the U.S. a 10% stake. As soon as he said that, we saw shares shoot higher. The president saying that Intel has agreed to give the U.S. government a 10% equity stake in the chip maker. A formal announcement is expected on Friday. That's according to people familiar with the matter. Here's what the president said. They've agreed to do it, and I think it's a great deal for them. The president telling reporters this just moments ago at the White House. We're going to have more on this story a little later in the program as well. We are also squarely focused on everything happening in the equity trade and in the bond market today, because traders got the green light. Stocks surging after Jay Powell today struck a more dovish tone than many expected during his highly anticipated final speech at Jackson Hole. The Fed chair covered a lot, during which treasuries rallied and the dollar tumbled. He addressed the dual mandate, the effects of tariffs, and emphasized the committee's data-driven approach.
While the labor market appears to be in balance, it is a curious kind of balance. This unusual situation suggests that downside risks to employment are rising. At the same time, GDP growth has slowed notably. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months. With high uncertainty, a reasonable base case is that the effects will be relatively short-lived. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic. The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach.
That was Fed Chair Jay Powell live from Jackson Hole earlier today for his last speech there. We've got Molly Smith with us right now. She's Bloomberg News economics editor. She joins us here in the Bloomberg Businessweek studio. Wow, a lot happened, including him coming out a little late, which is very unusual for Jay Powell. This guy's like always on time, so I was surprised to, still be listening at like 10:04.
He's always ready to go.
And he hasn't started.
Yeah, but I mean, as Trump would say, he's too late.
He's
always too late.
Okay, there it is.
And actually, Trump did come in today also just to say that it was too late for Powell to signal a September cut. So, very on brand.
Okay. Everything is on brand. He covered a lot of ground, and we got some of the highlights, the tidbits there. And it was also a very, I think, as Mike McKee talked about earlier, one of the reasons, according to reporters who were in the room, about why he was late is because he got a standing ovation. When he came in, according to Mike's reporting.
Oh, because we probably won't be seeing much of him anymore.
Well,
at this event.
At this event.
Yes.
And he kind of alluded to that. He said, apart from a couple of years during COVID when I did this virtually, and he talked, he thanked the Kansas City Fed chief for everything they've done. And what was your biggest takeaway? We saw what the market's excited about, but what were your big takeaways?
I mean, I think it's just amazing when you look at this amazing market rally that we've had in response, that it really is just because of these 4 words, adjusting our policy stance. Or really the couple before it, may warrant adjusting our policy stance.
And everybody says that policy stance is looser monetary policy?
Well, that it's going to be then that rates will be cut, that will be the signal effectively. So those, what is that, 1, 2, 3, 4, 5, 6 words there. That is why your 401ks are doing really well today. That is basically the essence of the speech.
Well, we're definitely seeing a really strong showing here in the equity markets. We're looking at the Dow Jones Industrial Average up almost 2%. We're just seeing green all across the screen today. But I mean, of course, what has really been overcast during this time period is all the spotlight that's been here on Lisa Cook. And that's something that we've all really been focused on here. But I'm curious, what is the importance here of the Fed's independence?
Yeah, I mean, that's obviously something that central bankers at the Fed at this conference, as well as the from all around the world who are also at this conference, are very much in support of. And that was a huge part of, coming into Jackson Hole. It was probably going to be a big theme of this, and that this is a concept that's really meant to be respected globally, and that central bankers take this really core to their mission of being able to operate free from the governments where they live. So this is it's something that Powell has made very clear in all of his speeches, and I'm pretty, again, on brand for him to stick with that today.
We heard from the Fed chair at the July policy meeting, and then we got the minutes earlier this week. And a few days after the meeting, we got the payrolls report for the month of July. And that kind of changed the narrative around the dual mandate, the maximum employment part of the dual mandate versus the stable prices part of the dual mandate. Did we get any insight from the chair as to how the Fed is thinking about the balance of that dual mandate right now and how that may have shifted since the latest employment report?
Yeah, this is what everyone was waiting to see, because a lot of people at the time had speculated that if Powell and the rest of the Fed had seen that July employment report before that FOMC meeting, which was 2 days before the report dropped, maybe it would have been different, the outcome of that meeting. And maybe they would have cut rates, or if not cut rates of that meeting, maybe would have at least signaled it more strongly at that point. But they didn't know that at the time. This came out 48 hours later. And certainly, as you said, Tim, like, our whole understanding of the labor market really changed that day. So Powell did allude to that, and that there are, certainly risks to the unemployment side of the mandate. And that's really where the opening the door to the September cut comes in, because at the same time, he's still saying that we have to be wary of inflation risks and that they're tilted to the upside and being mindful of tariffs, even if he thinks that those effects are ultimately going to be short-lived.
And one thing that Powell really tries to do, he tries to avoid anything that would represent him weighing on, fiscal policy as opposed to monetary policy. We know that he really is squarely focused on monetary policy here. But we can't leave out the fact that tariffs remain a clear concern here for the economy more broadly. What are your sources telling you about how the Fed is really factoring in the effects of tariffs as we look ahead?
I mean, Powell's made it seem pretty clear that his base case is for tariffs to be a short-lived inflationary effect, which is interesting, I think, because, there was a time where I think he was maybe viewing it a little bit more balanced or perhaps even more wary of it being of a more persistent impact. And which has then been interesting then if you are in the camp that you think that this is going to be a one-time hit to inflation, why you wouldn't be more open to lowering rates sooner. That if you are in the persistent camp, that would certainly lend credence a lot more to the holding rates elevated side of the argument. So they're all definitely mindful of this. There are definitely some Fed policymakers who are more mindful of it than others. We had Beth Hammack of the Cleveland Fed come on CNBC after Powell spoke, and she had a very different tone to when she was talking, and she said that she is squarely focused on inflation right now. And remember, she had just said yesterday or the day before that if the meeting was tomorrow, she's not going to cut.
I want to sit tight, Molly Smith. I want to bring in Eric Weiner. He's Senior Editor, Equities Americas for Bloomberg News. And also just take a quick look at the equity in the bond markets. The S&P 500 up 1.6%. The NASDAQ composite up 2%. The small caps, those interest rate sensitive, smaller market cap companies, up 3.8% as we speak. It's essentially the best cross-asset rally that we've seen, Eric. On the yield curve, we're seeing yields lower by about 11 basis points on the front end in the 2-year and the 5-year down 10 basis points. And we're also seeing the 30-year yields lower by 3.6 basis points right now. 4.88 on yield on the 30-year. The 10-year yield is 4.25 right now, kind of moving around a little bit. What was your big takeaway? Obviously, the market reaction is huge, but you're kind of smiling a little bit right now.
Well, like to Molly's point.
You're a little skeptical?
Well, I think that he said that they are going to cut rates, and it's not for a good reason. They're going to cut rates because the inflation is not showing up yet. And their real concern right now is growth and the labor market. And if you listen to what he said about rates, yes, he talked about it being temporary, but he also talked about how they haven't really shown up yet. So when you're talking about inflation, so if inflation is temporary, but if you think that the effect of tariffs is going to be usually a year to 18 months after they're implemented, we haven't seen what they're going to do. And in fact, if you think about it, most likely it will be the next.
Just because it's uncharted territory.
Right. It's new. The new Fed chairman, he probably, Powell himself, probably will not be the one who handles this. That by next May, we will probably be seeing a bunch of this. But at that point, he'll be out.
And maybe a Kevin will be there.
Right. So we don't know. But it's not necessarily his problem. However, what the market is doing is taking back 5 days of peeling off of interest rate bets. So you had 5 down days in the S&P 500, fairly shallow days, but still 5 down days.
We're basically down 1.8% off of all-time highs.
So we reversed that. 25 basis points is cooked back in for coming up this next meeting. But from there, we'll see, because I don't necessarily know what the inflation reports are going to show, but a lot of company earnings were talking about seeing inflation in their results.
But they're eating it right now, Molly, and we're seeing that in the producer price index data. And we're hearing that from companies too.
Right. Yeah. I mean, Walmart said as much on their earnings the other day. Target, very similar messaging, and of course, you would expect that from retailers who cater to that kind of audience, but. You guys were just saying a minute ago, I wanted to come back to this of, maybe the next Fed chair, maybe a Kevin. We heard from Jim Bullard. He's also in the mix. He was on Bloomberg TV after Powell spoke. And he's out here saying, who knows, maybe we'll see 100 basis points of cuts going into next year. So that, just to map that out, if we've got 3 meetings between now and the end of the year, would be September, November, December. So one of those then would have to be 50 basis points, and the other would be 225s, presumably, which, if you remember, was exactly the pattern a year ago. And this is so funny because Trump, when in his remarks in the Oval Office just a few minutes ago, in saying that Powell was too late to signal this September cut, also said Powell should have cut rates a year ago. And he did. He did. He did cut rates by 100 basis points a year ago.
Exactly. And the last time he cut rates was December of 2024.
That's correct.
Or not him. The
board.
The
Yes,
Fed.
that's correct.
Not him.
Not Powell. Right.
Yeah.
It's a collaborative process. But yes, the Fed did cut rates by a full percentage point coming into this year.
So one thing I've really been watching throughout this entire session has been volatility in the market, right? If you look back at the VIX index back in April when we were talking all about tariffs and everything, you're seeing it's spiking up to what, 52, the 52 handle. But if you look at today's trading session, right, we were sitting around maybe 16, but then as soon as Powell starts speaking, it just plummets and drops. We're now hanging around 13. Eric, how are you really analyzing this? What are you thinking when you really address the volatility here in the market for traders?
Oh, we saw it. I mean, we saw the chart. It's like a needle down. That's again the interest rate cuts. So if people were concerned about what the Fed was seeing, now you kind of know what they're seeing. You know that they're going to take out 25 basis points. They're going to take things down. What you don't know is where things go from here. And that's why, like, the next few reports, whether it's consumer price index, PCE, they are really key because that will determine whether what Bullard was talking about will actually be feasible. If unemployment continues to be a problem, but prices start really rising and showing up that way, the Fed's kind of caught. And it's hard for anybody to justify taking like 100 basis points out of the Fed funds rate when inflation is up. So we're right now in this limbo of not knowing, and that's what we're going to be waiting on, is what the data show.
Hey, we only have about a minute left. Molly, Norah said we're going to talk about the attacks on Fed Governor Lisa Cook, who did end up going to Jackson Hole. We have reporting on that from earlier this morning, Mike McKee as well. The president, basically at the same time that we were hearing from Fed Chair Powell, said that he would fire Lisa Cook if she does not resign. Can he do that? And what has been the response thus far?
Trying to remind myself on all of where the Fed governors can. I think this is one on the for cause.
Exactly.
Yeah. So yes, this does. I think that. Right. Thank you. Sorry, spaced out a second. From what I've heard from people, this does seem like it would be for cause. That if these allegations turn out to be true, that if this is really a case of mortgage fraud, then that would be a legitimate reason.
But I think you have a good caveat in there, which is if these allegations turn out to be true, because as of now they are only allegations.
Right, and obviously Lisa Cook is defending herself endlessly, that she has said that she will not be bullied into stepping down. She's looking into it. I'm sure Fed is. I'm sure she has a legal team that's doing so as well. So we'll see how this all shakes out. All
right. Molly Smith, economics editor for Bloomberg News. Also Eric Weiner, senior editor for Equities Americas for Bloomberg News, both here in the Bloomberg Businessweek studio. Coming up next on Bloomberg Businessweek Daily, the CFO of Webtoon joins us. That's next on Businessweek.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. President Trump says Intel has agreed to give the U.S. government a 10% equity stake in the company. We've got Intel shares rallying on that news. Intel up by just about 5%. We have got the Dow, the S&P, and NASDAQ all advancing today. After remarks from Fed Chair Jay Powell, you heard them live on Bloomberg. Wall Street got the rally signals from Powell it was hoping for. Powell opening the door to an interest rate cut, citing labor market. So here's where we stand. S&P off session highs, up 98, now it's 64.68. That is a gain of 1.5%. Dow Industrials up 849 now, also off session highs, up by 1.9%. The NASDAQ Composite Index up 2%. The Russell 2000 2000 index of small cap shares is surging 3.8%. Our Mag 7 index up 2.5%. Dow Transport's up by 3.2%. The 10-year 4.25%, with the 2-year 3.68%. Gold up $32 the ounce, up by 1%. West Texas Intermediate crude oil up 0.4%, 63.76 a barrel. And Bitcoin now up by 4.1%, just above $117,000. We're keeping an eye on trucking stocks like JB Hunt and Saia after Secretary of State Marco Rubio said the U.S. will halt issuance of worker visas for commercial truck drivers. Shares of JB Hunt, they're up by 4.9%, Saia up by 9.1%. Again, recapping a Powell rally on this Friday. S&P 500 index up now by about 98 points, a gain of 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update. Charlie, appreciate it. Shares of Webtoon Entertainment. You remember this? We talked about this on the close just last week. Surged 81% last Wednesday. It was its best day since going public last year. You remember this? They announced a partnership with Walt Disney. It's going to bring characters such as Marvel's Spider-Man and Luke Skywalker of Star Wars to its platform. The announcement also came as Webtoon reported quarterly results that beat analyst expectations. That helped fuel the rally last week as well. We've got with us David Lee. He's CFO and COO of the $1.9 billion market cap company. It calls itself a, quote, global storytelling platform that enables creators and users to discover, create, and share stories. David joins us from our Los Angeles bureau. Also with us is Nina Trentman. She's Bloomberg News senior editor. She writes the Bloomberg CFO briefing newsletter. She joins us here in the studio. Check out her newsletter at bloomberg.com/CFO briefing. David will be featured in an upcoming edition of that. David, welcome. Good to talk to you again. I think last time we spoke, you were CFO and COO at Impossible Foods. It was a previous lifetime. You're at Webtoon now. I think, though, at Webtoon, a lot of people who don't have kids of a certain age, maybe they're too young, maybe they're too old, might not be familiar with the platform. What is it?
So Webtoon is, as you say, it's a global storytelling platform. And while many of us may not have heard it ourselves, I bet our Gen Z kids and friends have. In fact, the majority of our 150 plus million monthly active users are exactly in that demographic. They spend 30 minutes a day plus enjoying news stories from this network of 24 million creators globally that get to write great webcomic and web novel stories on our platform. I bet you've seen a movie or two, though, that you didn't realize started as a Webtoon.
David, thanks for joining us. Just wondering, actually, in terms of the spending on the platform, one of the things that we've been wondering about at CFO Briefing recently is this: what is the consumer doing and how are consumers responding to all the different news that we're hearing on tariffs, on what's going on in DC? I'm wondering, are you seeing any changes in terms of spending amongst your consumers?
Well, Webtoon's very fortunate. You know, our consumers love a good story. They love a good story in good times and bad times. And increasingly, they love a good story independent of the language or the country that the story came out of. We have examples of 900 adaptations, 100 rich film, movie, and TV series that came from all over the world, because in good times and bad, people want to tuck into a story from an unexpected source. And our privilege is to allow these 24 million creators, by the way, most of whom who have full-time jobs. They're kindergarten teachers, they're plumbers, they're people who are hard at work, who get a chance to break through and maybe even have a great movie like we saw with Sidelined, The Quarterback and Me on Tubi. So far, we've been immune from some of the news that you carry every day because our product is great storytelling and consumers seem to still love it.
That is good to hear. I'm just wondering, Tim just mentioned the Disney partnership. I'm curious, for you as a CFO, how does it change the financial trajectory of the company?
Well, the Disney collaboration, I think, is pivotal. What it indicates to me is that we are not niche. We are mainstream for our Gen Z consumers today here in the US, the largest market that we see ahead of us. It also means that a wonderful company is comfortable allowing us to take their iconic stories. You know, The Amazing Spider-Man's coming out soon, and it's coming out as a webcomic in our platform. Disney recently said in an article, they said, We looked at a lot, and they're the leader. And we feel grateful to be able to bring their stories to life. And frankly, we're going to bring alternative endings, background characters to the forefront. We're going to write original stories with Disney, because our powerhouse of creators can allow a story that may have been written years ago to be really fresh for the Gen Z consumers on our platform.
How important is it to really be working with such an established company like Walt Disney and just getting that visibility through this partnership?
I think it's critical because, frankly, the biggest challenge we have is that while our Gen Z consumers here in the US know us, love us, and spend 30 to 60 minutes every day on us, a lot of investors, a lot of corporations, a lot of your audience has never heard of Webtoon, even though we went public a little over a year ago. I think part of the movement that you may have seen in the company's stock is simply awareness that Disney is recognizing that Webtoon is going mainstream here in the US, that we're a great source of fresh content, but we're the powerful leader of the category where we just released short form video on Monday of this week. These short 5-minute videos crafted out of proven stories on our platform is exactly what Gen Z wants. And so for us, it's really important to bring awareness to investors and companies about what Gen Z consumers here already know, which is that we're a great source of storytelling.
Should investors expect more partnerships similar to the one that was announced last week with Disney?
Well, I think if you look at what we've talked about in the last couple of quarters, just the quarter release prior, we talked about our partnership with IDW. We talked about bringing Sonic the Hedgehog and Godzilla and other great platforms to our content and our storytelling. We also are constantly seeing things hit the main screens. Just last week, we saw a major movie release called My Daughter is a Zombie. It just got released in the last couple of weeks here in the US, but it's one of the #1 best-selling releases in Korea already. That came from us. So increasingly, you're going to see us partner, but also create original content on our platform and on screens coming to you, whether it's Amazon, Tubi, Netflix, or even a movie theater more and more.
David, I'm wondering how you're thinking about profitability on the back of the partnership with Disney. We talked about this before. I'm wondering, does that change how you're thinking about that?
Well, one of the great things about our collaboration with Disney is it's notable what I did not release. I did not release onerous upfront financial terms. I didn't even talk about it as being different than the great way in which we partner with franchises previously. And we posted in the quarter a positive 9.7 million adjusted EBITDA, which I think it shows that our cash balance that was given to us from the IPO on NASDAQ a little over a year ago is growing. So even as we grow our webcomic app MAU here in the US and in English-speaking locales 19% year on year for the last 2 quarters, we're still building cash. That doesn't mean we hoard it. We love the ability to create shareholder value, but we're very careful to return shareholder value very prudently. We believe in self-reliance. That's why we went public. And right now, there is no need for me to disclose any different set of financial conditions other than excitement strategically for the Disney collaboration.
We're speaking with David Lee, CFO and COO of the $1.9 billion market cap Webtoon. Also with us is Nina Tretman, Bloomberg News senior editor. She writes the Bloomberg CFO Briefing newsletter.
Yeah, we're unfortunately running out of time, David, but maybe one question in terms of the customer group that you mostly tracked at Webtoon. You mentioned Gen Zs to us. I'm wondering, how do you keep track of that specific customer group?
Well, it's funny, this generation of consumers, the younger generation, Gen Z and Gen Alpha, they want to discover on their own content. So we're very data rich, and we want to make sure we have the best source of stories. And we have 120,000 stories that arrive every single day to our platform. But because we're so data driven, we can tell, we call her Maddie, our target consumer. We know what Maddie is reading 30 minutes every day. We know what chapter of what story she's reading. And so it's easier for us to use our technology to ensure she finds her next story, which is part of the reason why we've revamped our product here in the US. Importantly, as Maddie grows older, we know from a longer experience elsewhere that she'll like different genres. And the great thing about Webtoon is we can offer every genre, because it comes from 24 million creators that we've cultivated over the last over 10 years. So she, Maddie, will grow old with us, even as she changes her tastes. We love her to finish and complete stories because we have so many more coming as an evergreen platform every day.
And she's not a zombie. I just want to make sure.
I would never characterize Maddie as a zombie.
Okay.
Though
You just said my
apparently she likes
daughter's a
to read about
zombie.
them.
Talk about Maddie. I just want to make sure we're.
Yeah, no.
Okay.
No zombie there. Okay.
Cool. All right. Sorry. Go ahead, Norah.
Well, David, I did want to ask you about how you all are thinking about AI. Of course, we know this has been a really big topic this year as people think about how we're using AI spend for some of these large companies. So how are you all integrating AI into your platform?
You know, it's interesting. Webtoon started from a parent called Naver, which is a tech powerhouse. And we use our technology, including our AI, which we have a lot of, actually, to protect the human creator. We protect them by fighting piracy, arguably better than a lot of other bigger consumer tech platforms I know. We allow consumers to find these 120,000 stories I mentioned that come every day. We help them find the stories they want using AI and technology. We may be the best untold story about AI promoting human creativity, generating returns for our human creators, protecting them in a way that I don't think is oftentimes on your network or in the press. And we're really excited to have a business model. You know, we've shared $2.8 billion with our creators from 2017 to 2023, because from the very beginning, our founder said, we will build a global network of people who can fair share in the success neither of us know how big is yet. And that allows an amateur creator somewhere in the world with a dream of being a storyteller to change their lives and contribute to the platform that we've built. So I feel really good about our use of AI. I'm held accountable by my teenage daughters, who are also consumers. And this is one case where I think tech is at work for human good.
David, good to see you. Thanks for joining us on Bloomberg Businessweek Daily for the CFO Brief. And that's David Lee, CFO and COO of Webtoon. Also, a big thank you to Nina Tretman. She's Bloomberg News Senior Editor. She writes the Bloomberg CFO Briefing newsletter. You can sign up for it at bloomberg.com/CFO-briefing. Well, let's take a look at markets as they continue to surge. Equity markets higher. S&P 500 up 1.6%. The NASDAQ composite up 2%. The Dow up 1.9%. But it's the Russell 2000, those interest rate sensitive small caps, that are the standouts of the day. 3.8% to the upside, where they've been pretty much all day since just after 11 o'clock when we heard from Fed Chair Jay Powell at Jackson Hole. We're going to have much more on that in just a few minutes. In the meantime, I want to pivot back to technology a little bit and legislation, regulation, because U.S. tech companies are under pressure from foreign governments to censor speech. This is according to the Federal Trade Commission Chairman Andrew Ferguson. In a letter to firms including Meta, Amazon, and X, he urged companies to safeguard U.S. consumers. Chair Ferguson spoke with Bloomberg Technology's Caroline Hyde.
In the United Kingdom and Europe and elsewhere, American tech companies that do business, in the United States and elsewhere are coming under pressure, sometimes through direct legislation, to potentially censor speech in Europe, maybe even in the United States. Of course, the Brazilian Supreme Court justice is of the view that American tech companies need to censor speech everywhere because it's the nature of the internet. And it was really important to me as an American law enforcer to make it clear to American companies, you don't get to take a free shot at American consumers just because of something that governments in other parts of the world are asking you to do. We've got laws here in the United States that protect the relationship between American consumers and American tech firms. And so no one should think that you just sort of get to do to Americans whatever you want in order to comply with the demands of foreign governments. And that, American laws, particularly the Federal Trade Commission Act that I enforce, don't allow American tech companies to hurt American consumers just because a foreign government is demanding it. And I just wanted to make sure that everyone, consumers and the tech firms, understood this is how I see the law. And I want you to come to explain to me how you are planning to protect American consumers, notwithstanding the demands of these foreign governments. Mm-hmm. And if they aren't, then I'm going to enforce the law against them.
Thus far, we have seen action taken in particular by Apple, pushing back at requirements by the United Kingdom for a so-called backdoor into data that they hold, encrypted data. I'm interested as to how you felt that unfolded in the UK and whether Apple played by the playbook you wanted to see.
Yeah, I mean, look, and I think a lot of credit here needs to go to the vice president who, sort of personally managed trying to protect Americans from these demands of a foreign government. But yeah, I mean, look, I want American tech firms to understand you have legal obligations in your home country, in the country that made it possible for you to become what you have become, to protect American consumers and not basically to give Americans the short shrift because it would be easier to comply with the demands of a foreign government. And so I'm glad that because of pressure from the United States and particularly from the vice president, that we were able to achieve this outcome and protect consumers from Apple. But this isn't going away. Europe has passed these laws that promote censorship. Britain has these laws. We're seeing this sort of thing happening in Brazil. And it's very important that American tech companies understand you cannot just sort of take it out on Americans in order to comply with these other foreign governments. You have to protect Americans first.
That was FTC Chairman Andrew Ferguson speaking just earlier today to Bloomberg Technologies' Caroline Hyde. For more, check out The Terminal, and we'll play more from that a little later on Bloomberg Television. In the meantime, stocks still in the green. The bond market, too, rallying with yields giving off a little bit, especially at the front end of the curve. For an update on everything on today's trade, let's head on over to Charlie Powell.
Thank you very much indeed. Lots going on today. You keep it locked into Bloomberg for the very latest. Let's begin with that 2-year, 3.68%. 10-year right now, 4.25%. Powell speaks. Equity markets surge. Right now, we're off session highs, but we got the S&P up 100 right now, 64.70 where we stand. That is a gain of 1.6%. Dow Industrials up 843, up 1.9%. NASDAQ up 422. That is a gain of 2% on the NASDAQ Composite Index. The NASDAQ 100 Index up 1.7%. Russell 2000 Index of small cap shares up 3.7%. And our Mag 7 Index surging by 2.6%. Again, the 10-year 4.25%. The 2-year 3.68%. Gold up $34 the ounce for the precious metal, a gain now of 1%. Gold at $33.73. West Texas Intermediate crude up 0.4%, 63.78 a barrel. And Bitcoin rallying 4% at 116,887. Briefly, President Trump says Intel has agreed to give the U.S. government a 10% equity stake in the company. Intel shares up by more than 5%. And Apple in early discussions about using Google Gemini to power a revamped version of the Siri voice assistant, based on reporting by our Mark Gurman, marking a key potential step toward outsourcing more of its AI technology. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. If you type in Top Go on the Bloomberg Terminal, you get the top news. And the top of Top Go on the Bloomberg Terminal is a story right now by none other than Denitsa Tsekova, along with some other folks on the Bloomberg News cross-asset team. Denitsa Tsekova is Bloomberg News cross-asset reporter. She joins us here in the Bloomberg Businessweek studio. The headline, Wall Street gets the rally signals from Powell that it was hoping for. Talk about a sigh of relief, or maybe a little bit even of exuberance, but quite a different tone in today's trade because, well, traders liked what they heard.
Yeah, just 1 year after the memorable Jackson Hole, when we saw the signal of rates going down, here we are again. And what we're seeing is some of the frothiest parts of the markets are leading the rally. We've always talked about a lot about the Russell 2000 leading the gains, but a lot of the meme stocks, a lot of the laggards of this year are seeing a very strong rally today. So obviously that's hinting to some exuberance. Of course, this is a big cross-asset rally. We're seeing stocks, we're seeing treasuries all jump in unison. We haven't seen such a daily move since April. Of course, that's coming after a short sell-off we saw in the S&P 500. Everyone was expecting a very different Jackson Hole. No one was preparing for a clear opening of the door to a rate cut in September. Of course, now the questions remain of what is going to happen going forward. It seems like for September's traders pretty much priced in 100% rates cut. But what happens after that is where the questions began. We saw a lot of other pockets of the market rallying, like emerging markets. We saw all the economically sensitive shares on a tear, regional banks. So, of course, it makes sense. All of those are rate-sensitive sectors, and we're seeing them react as they should to a potential of rate cuts. So we're here to watch what happens next.
So you mentioned the short sell-off that we saw earlier this week. We were in the red a little bit, but of course we're talking about a pretty strong year where we've been notching so many all-time highs. But I mean, this is coming off of 2 years previously where we saw gains of more than 20%. But of course, we're seeing this relief rally today. Pretty strong showing here. What are your sources telling you about what performance could look like moving forward through the end of the year if this rate cut were to come?
For sure. There are a lot of technical forces in the market that were supporting it through the last few months, that some of them are a little bit exhausted. Of course, we have volatility targeting funds, we have CTAs. We've been looking at all those numbers, and they've been buyers for some time, and they have been supporting the market upwards. Some of them is obviously exhausted. But that said, we had a very strong earnings seasons, and we've seen that gap open between fundamental traders and systematic traders. And fundamental traders are actually that have more scope to increase allocation. So potentially what happens here is that the macro and of course the micro is more important, and we can see those fundamental traders potentially increase allocation, even as forces like CTAs, like volatility targeted funds have maybe exhausted some of their cash power.
The highly anticipated, the closely watched, the Fed chair speech that has already happened is not something we're looking forward to anymore because it's happened. Next, is it NVIDIA earnings Wednesday after the bell? Is that the next catalyst for this market?
I think so. I think the moment we got the statements, we got so many people saying just like, okay, we're done with that. We move to the next one. And I think that's clearly NVIDIA. Obviously, it's been a very strong earnings season that has supported the rally. This is a rally that's built on a strong fundamentals and sentiment. And you can imagine the same way as the bar was really high for beats versus misses, everyone will be super sensitive to what we see from NVIDIA. And that's clearly the next big event.
Denitsa Tsekova from the Bloomberg News Cross Asset team. Check out her story along with her colleagues. It's among the most read story on the Bloomberg terminal. Also, just type in Top Go to find it right at the top there. I want to go to space now because there's some news this week in the world of space. Boeing's X-37 space plane, which the company describes as a, quote, orbital test vehicle, last night blasted off on a SpaceX Falcon 9 from Kennedy Space Center in Florida. It's the 8th mission for the reusable spacecraft. Tejpaul Bhatia is back with us. He watches all of those launches closely. He's CEO over at Axiom Space. It provides mission services, and it's also working to build the next space station. Tejpaul, welcome back. I want to start with the upcoming orbital data center launch. This is something, do we know when that, do we have a date for that yet?
Yeah, well, first, thank you for having me back. And second, I like that you said you want to go to space.
Oh,
you started saying, I was like, I'll go with you in a second if you want. I know a guy who sends people up. Yeah, I would go in a heartbeat.
Why haven't you been?
You know, for the last 4 years at Axiom and the last 4 months as CEO, you know, it's been my dream since I was like 3 years old. When I say dream, it's all I've been thinking about. And as we as a company have now sent multiple countries, multiple missions, 16 astronauts to the ISS, and I figured out how to go, I realized that my purpose is much more about getting as many people up as we possibly can, because I am certain that we will have many opportunities to go.
So do you think you will in your lifetime?
Yeah, for sure.
And how many years?
Sure. You know, possibly this decade, definitely next decade.
Okay.
Yeah.
Okay, before that, though, the orbital data center.
Yes.
Can you explain what exactly this is? Because we talk a lot about data centers here, but we never talk about them in the orbital context.
Yes, in layman's terms.
Yeah. Yes, exactly. So it's interesting. Like, I'm smiling now because I'm just thinking about going to space. You know, while my first passion has always been space, actually the one thing I'm probably another expert on in the world is cloud. You know, before getting into space, I had my own startups. I worked at ESPN in the early days of HD streaming, and I was at Google on the startup side while we were ramping up Google Cloud. And as we know on the terrestrial side, cloud is a phenomenal business, right? It's a phenomenal business model. The market's growing faster than the largest cloud providers combined. We believe space is going to be exactly the same thing from a business model standpoint. But then the question is, why send a data center up there when we have so many down here? And the first thing I would say is, think of it this way. When we're talking about orbital data centers, and we've been running cloud computing on the International Space Station, Axiom Space, along with Amazon, since our AX1
the
mission.
snow cone edge computer.
Exactly.
Yeah.
And on every single mission, we've done significant compute on it, and between missions, we've done workloads from the ground. On the AX4 mission, we sent up an Aura ring that was checking the biometrics of the astronauts. I'm gonna go, oh, you give me the finger?
You know, wearing one right now.
Yeah, I love it. I'm obsessed.
Looking at the ring.
I got it the first day I took the CEO role, and I got it to track my stress.
So it was like bestowed upon you.
Sort of.
Okay.
I think the metric that I care the most about is sleep. That's the one I track in terms of my performance. But we were measuring all these things on the AX4 mission and feeding it to the snow cone on ISS. So actually using edge compute, cloud compute in space versus on the ground. But the point here is, when you think about orbital data centers in the ISS, don't think of them as so far away. It's literally 250 miles away.
So how much power does it take?
A lot. A lot. So
Okay,
it's the
what's a
same.
lot?
It's the same problem that we're going to have here on Earth, which is also interesting to me now with AI, that the limiting factor is power. And you're seeing this growth for nuclear startups, and you're seeing this growth for AI data centers needing nuclear power. When we're talking about space, that's going to be the limiting factor.
So is that the answer? Nuclear, small modular reactors? How do you power
I would
these
think so.
things?
It's a little.
Is there any other way to do it? Could you do it with solar?
You could, but at some point, those are going to get so big to give the power we need. And a lot of people will say, and I'm not speaking as a scientist here, because I said the wrong thing first also, which is, well, you don't have to worry about cooling there. You do. You have to, convection is something that is, you have to, for all the power you create, you have to dissipate it as well. So that just surface area is going to get so large. So I think ultimately that will be the same solution. But the point about the orbital data centers is, for many people on the Earth, not like us here in New York or in Virginia or DC or other cities, that will be the closest data center to someone at any given time.
Wow.
So how concentrated is this space? How many players are here alongside you all?
So we, as Axiom, we're building the replacement to the International Space Station, and our modules that will connect to the ISS due to our exclusive contract to connect to commercial module, those are cloud first. To keep human life going, you need cloud computing services. Now, we could fractionalize those and offer those to other companies. We're actually sending up separate infrastructure later this year. You had asked when, Q4, in the next couple of months. But the point of this network, ours we call a heterogeneous network. A module could be a data center, a satellite could be a data center. But when you look at other constellations, those are homogeneous networks, all the same. But the point is they're connected by data. Some are all one network, some are federated, but this is where we're going. In terms of where the space is, I think people are finally starting to wake up. Just even the fact that you're talking about orbital data center, ODCs, as we call them, just 6 months ago, people wouldn't know what you were talking about. The words are very obvious, a data center that's orbiting the Earth, but still it's just kind of like, why? But I think we've gone well past that, and now it's how and when.
You said that the potential use case here is that some people who live around the world, this might be the closest data center to them at any given moment, one that does orbit. But there are latency issues with that and speed of connectivity issues that I would imagine are better handled on the ground by wireline connections.
So I love that question. I would have had the same thing. When my team came to me and they gave me all the reasons why we should do this, and again, I'm a cloud nut and a space nut. I was looking for solutions for that.
Like, this is the literal cloud.
Yeah, literal. This is literally literal cloud above the clouds, right? Like not data centers around here. One of the most powerful use cases of orbital data centers is low latency AI. So it actually solves the latency problem for many distance issues like cars driving around in remote areas, navigation for maritime needs. Now, there's many cases of that for Earth, but now when you just go a little bit above the atmosphere and look at space, edge computing on labs in space, edge computing for other satellites. Where it gets really crazy and awesome for me is what happens when latency actually becomes a problem because of distance. So we have laser and optical communication. I'm not worried about speed and bandwidth. I am worried about power. But what happens when your distance is so long that actually synchronizing the internet is a problem? Or when two planets are on opposite sides of the sun? You don't even have line of sight. How are we going to synchronize Twitter? How are we going to synchronize YouTube? How are we going to FaceTime? I think those are just such cool problems for students around the world to solve.
So super quickly, the ISS is set to retire by the end of 2030. How confident are you in that timeline? And what risks does Axiom face if NASA extends its life longer than expected?
Yeah, I'm pretty confident it will come down. It's already been extended, right? Originally, I think the expiration date was 2024, and Congress has stretched it out. It's a piece of equipment, right? It was designed with a certain lifespan. Some parts are newer than others, but the whole thing was designed to come down as one. So I think it's a given. It will come down. Like, when, we'll see, but I think by 2030. I feel very confident about it. I don't think there's any risk if the government extends it. I think it's great if they extend it. But independent of that, if there isn't a commercial solution, if Axiom Space is not up and running by the time it comes down, the only other space station in operation is a Chinese station, right? So that is a very real, I'll say, competitive threat, strategic competitive threat. And from a diplomatic standpoint, the leadership that the U.S. has provided, and now the leadership that companies like Axiom Space, the diplomatic interest we can push for the U.S. around the world with all the different countries, we'll basically just be ceding that to the Chinese. And I don't think that's what we want.
Bhatia, good to see you. Thanks for
having me back. Yeah.
100 days as CEO of Axiom Space. I want to take a look at markets right now because we're still seeing equity markets surge and bond yields lower. The Dow up more than 1.9%, the S&P 500 up 1.6%, the NASDAQ composite up a cool 2% right now. The Russell 2000 RTY on the Bloomberg terminal, those more interest rate sensitive small caps up 3.8%, been hovering there much of the day. In terms of bond yields, we're seeing yields fall across the curve, the front end more so, with the yields on the 2-year down more than 10 basis points. The yield on the 10-year down, go ahead and call that 7 basis points to 4.26%. I'm Tim Stenovec along with Norah Mulinda. Let's take a look at some stocks on the move today. We're joined by Bloomberg News cross-asset reporter Denitsa Tsekova. Denitsa, you have a lot to choose from. Did you even find any that are moving lower?
It was very hard to find moving lower. So let's start with those moving higher. It's Intel. It's been the big news of the day, apart from obviously everything Fed. President Trump said that Intel had agreed to give the U.S. government a 10% equity stake. We're yet to see the formal announcement that is expected later today. The ticker, of course, is INTC. We've seen quite a few jumps as those news have been developing. Today we're seeing more than 7%, really one of the big gainers in the S&P. The deal would be part of a bid to provide a boost to Intel. Intel, of course, has been through a turbulent stretch. Investors have been worried that it's falling behind and it's losing its technology edge. And of course, President Trump has been trying to get a stake there. This is something that's rarely, of course, has happened in history. It's an intervention in American company that really is kind of a precedent. But what we're seeing is that, of course, in August, he announced that NVIDIA and AMD agreed to pay 15% of revenue of certain chip sales to the U.S. So clearly there is this campaign to generate revenue of those American companies. But so far, the market is reacting very positively. And of course, there are many worries behind, but so far we're focusing on the optimism for Intel.
Shares of Intel are up 25% year to date. But I mean, when you look at Wall Street recommendations, about 78% of analysts are saying to hold the stock, 4 saying buy, and 7 saying sell. But you're looking at a name that, none of us know. Apple. What's going on there?
Let's start with another big one. Apple is in early discussion. This is like Bloomberg exclusive about using Google Gemini to power a revamped version of Siri. Obviously, there have been many changes with Siri, many discussions, and it seems like this is what has been underway for quite some time. This is marking a key potential step toward outsourcing more of its artificial intelligence. We're actually seeing positive reaction from both Google and Apple. Of course, the ticker is APPL, and the stock is up about 1.5%. Google has started training a model that could run on Apple services. That's what people said, but this, of course, will take some time. Apple approached Google to explore building a custom AI model that will serve as the foundation of the new Siri, most likely next year. Of course, that's been an interesting development. Apple hasn't been necessarily keeping up with the rest of Magnificent Seven this year, but we're seeing a boost on this news. So we're yet to see how investors will read that going forward, that outsourcing of AI.
Yeah.
Bloomberg News exclusive from Mark Gurman. Another one. Did you have a question, Norah? You were gonna.
No, I want to see what's going on with this exclusive.
Okay, cool.
Let's keep going on, right?
All right, yeah.
INTU, Intuit?
Intuit is the next one, and you did find an actual decliner.
I actually found one. I was so excited about all the small caps rallying that I forgot that Intuit fell 5%. The tech software company had a tepid forecast. It actually had a pretty strong earnings report, but all we care about is the forecast, and clearly the reaction is pretty bad. The ticker is INTU. The tax preparation software said it expects sales growth between 14 and 15%. And that's where the street is disappointed. They expected stronger growth rates. Revenue actually climbed 20%. We're talking about nearly $4 billion in revenue, and this is ahead of analysts' estimate. But this wasn't enough to bring relief. The stock is up 5% year to date. But if you look at the chart, the last few weeks have been quite painful. Last month, the company launched a set of AI agent, and it's working to automate a lot of things, including customer relation, financial analysis. But so far, it seems like investors are not necessarily rewarding the AI success.
A big thank you to Bloomberg News cross-asset reporter Denitsa Tsekova. And for more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. We do have a little more than an hour until the equity markets close. We're still seeing stocks surge, up 1.5% on the S&P 500, 1.9% on the Dow, as is the NASDAQ composite. The Russell 2000 also continues to be higher. Those interest rate sensitive small caps are the outward winners of today's trade. I want to bring back Denitsa Tsekova, who's been covering the trade throughout the day today. You and the team have one of the most read stories on the Bloomberg terminal about the shift in tone from the Fed chair just in the last 30 seconds that we have with you. What specifically were they most excited about, apart from the fact that there could be this rate cut? Because it's not all great news.
It's not all great news, but the fact that it's opening the door is definitely something market has been looking for a very long time. And as I said, its expectations going into the meeting was the total opposite. A lot of people I spoke to said we're really surprised. We didn't expect such a clear message that September will be a rate cut. So that definitely weighed on, especially what we're seeing in the laggard, those names that are frothy, really reacting to that. And those names were hit the hardest during the latest short-term sell-off. We said, and obviously those names are the clearest possible bet for investors to bet on rate cuts, and we're seeing that.
Denitsa Tsekova from the Bloomberg News cross-asset team. That is going to do it for us on Bloomberg TV. Stick with us on radio, YouTube, and Bloomberg Originals. The close starts now.